So on the channel, we've just produced another stock that has done a 5x return, and that's the dream, isn't it? It's to get those 5x, 10x stocks. And today I thought we'd have a bit of a reflection video talking about how this stock ended up coming a 5-bagger. You guys know me, whenever something goes wrong, I like to look at that situation and go, why did that stock not perform? And also, when a stock goes well, what were the key indicators for this to come an amazing stock to perform and give us good returns? So it's a bit of a reflection video, and I thought it'd be good to do it on a Friday, especially with the big bull market that we've had. So hope you enjoyed the video, guys. Let's get started. So the stock that we're going to talk about today is HIMS and HERS. This stock has performed absolutely amazing, and since the days of when the stock actually got to $3, which is absolutely crazy to say, this stock has now come a 5-bagger on the share price. Now personally for me, it's not a 5-bagger just yet for me personally. It's around about 200% return, which is still very impressive, and I will take that. But a lot of you guys were able to get this at the $3 and come a 5-bagger, and I remember making videos about this stock at $3 and saying, look, at $3, this is going to be absolutely insane how this performs. And we're only really 2 years into the investment, which is quite early days to have a stock that performs that well. So I thought it'd be a really good time to look back and go, what were the key things of why this came a 5-bagger, and also why I had the confidence to call this out as a 5-bagger on the channel. Now, first of all, for me, I want to just talk about a 5-bagger, a 10-bagger in the portfolio. And this mostly came aware to me is that when I read the book One Up on Wall Street, how important it is to achieve a 5-bagger or a 10-bagger in the portfolio. You guys know me, I want to buy a stock, I want to try get 100% return, that's my aim. But realistically, as well as getting them 100% returns, I do want to achieve a couple of 5-baggers and 10-baggers in the portfolio. If you ever read One Up on Wall Street, it actually goes into detail the difference a 5-bagger or a 10-bagger makes to the portfolio. The returns are absolutely amazing. They increase massively if you hit that one of those stocks. So for me, I really want to get 6 out of 10 stocks correct. I think a few people expect you to get 10 out of 10 right. No one's ever going to get 10 out of 10 right. Even Warren Buffett doesn't get 10 out of 10 right. 6 out of 10, if you get 6 out of 10 stocks right, you're probably going to do quite well in the stock market. For me, I always actually try to get 7 out of 10 or 8 out of 10 stocks right. But I've been hitting when I've been doing stock investing, I've been more towards a high 8 out of 10 returns on stocks, which is absolutely amazing. So I'm beating the general market expectations and I'm beating my target. I want to be a little bit more aggressive. So for me, I've got a lot of stocks right when I've talked about stocks. But like I said, the big thing is actually getting one of those 5-baggers or 10-baggers. As an individual stock picker, you do want to hit a couple of 5-baggers and 10-baggers if you want to beat the market. And HIMS for me is one of those stocks that I wanted it to be a 5-bagger or 10-bagger. Same with DraftKings, that came in that category where I want them stocks to be big returns for me. And the benefits of having a 5-bagger or 10-bagger is that obviously your returns are absolutely amazing, but the ups, people forget, like, you know, the most you can lose on a stock is 100%. What you can make up on a stock is 300, 400, 500, 1,000% on a stock. And when you are hitting those stocks that are coming 4-baggers, 5-baggers, 10-baggers, it also makes up for a lot of mistakes as well. So the thing is that I think some people forget is that if you are going for these more aggressive stocks, you are going to open yourself up for more mistakes. If you are going for those heavily growth stocks that are probably going to be 5-baggers, and sometimes they are unprofitable stocks, you do open yourself up for more mistakes. So you do need to kind of hit the ones to kind of make up for them mistakes. Like I said, you know, you want to get 6 out of 10 stocks right in this game, even 7 out of 10 stocks. So this is why it's key to hit these, because it makes up for a lot of mistakes, and also your returns. This is where, as an individual stock picker, you crush the S&P 500. And that's where it goes to HIMS and HERS. At $3, I thought this is the one. This is one that you could see that big returns on, and that is what's happened, and the stock's performed absolutely amazing. And those are the ones that you need to get the returns from to outperform the market, and also cover for a few errors that you might make on the way. Now on the way, you know, there is going to be a few errors that you do make, and as anything, there's always that kind of, you always learn the hard way to not do their mistakes again. So for me to like get to a HIMS and HERS, I've seen a few people that have maybe sold the stock on the way because they've just been up a little bit. And I think that's the first stage of like getting a 5-bagger or 10-bagger, is that a few people don't ever achieve that. They do pick the stocks. Like I reckon a few people have bought this stock, but they've already sold out. And unfortunately, you only learn that the hard way, is that you won't, it's quite easy saying you want a 5-bagger or 10-bagger, but on the way you can sometimes sell out some of those stocks a little bit too early. And even now there's still times where I personally do that mistake. I mean, Celsius has been a 5-bagger since I picked the stock on YouTube, and once again, it's the example that, you know, even to today I still make mistakes where I sell things and like, why did I do that? But also I learn it on the way as well. So if you ever look back to some of the first stocks I started talking about in like 2016 and 2017, which is crazy to say now, is that that's how long I've been doing it for and posting these videos on YouTube. But if you go back to that time frame, I remember buying Block at $20, $25, and the stock went on to be a 10-bagger. And I sold for 100% return, and I went, oh, I mean, since it has pulled back a little bit, but I could have made a 10-bagger on Block, and I sold that one because I just saw the gains, and I thought, oh, I'm going to take the profit. I didn't have anyone really to help me. I didn't really have, you know, YouTube wasn't a thing at the time. So for me, I just went, wow, this is amazing. I'm going to take this money. But then I learned the hard way, like, if they're great stocks and you want the big returns, you have to sit on your hands a little bit. Ferrari race, I remember buying this after the IPO crash, and this stock went on to be over a 5-bagger, and I went, you know, I made good money on it. I sold it for 100% return. But with a high quality business, sometimes you just got to sit on your hands. Apple, I remember buying Apple during the 2018, 2019 stock crash, and I sold that out for a 50% gain. And it's like, you know, it's a great company. Hold the great companies if you want these sort of returns. Microsoft, you know, that's when I started learning about I still hold Microsoft, and then that was one of the stocks that gave me that 300% return. Pinterest, I started buying Pinterest during this time frame, and obviously I made over 400% on it. InMode, you know, once again started buying the stock during the IPO dip, and once again that came a big massive return during that time frame. JD.com, another stock that made over 400% return on during the 2018 stock crash, came on to be another 4-bagger for me. Tesla, same again. Even then there was times where I did hold it and I made a really good return. Could have maybe even held it a bit longer, but made good returns, over 300% on Tesla. So HIMS was like the learning curve of like, okay, I've got a great average on a great business. Sit on your hands, don't sell it out if you've got a great business at great value. And that's the point where you learn how to get a 5-bagger and 10-bagger, is that sometimes you have to just sit on your hands. You've got to be a bit of a dead investor. And then eventually the learning curve starts coming in, and that's where I have a few stocks that have done very well and come, you know, 4-baggers, 5-baggers. And even though I still make mistakes with that, obviously I've got better at it, and now we're getting the rewards with sitting on HIMS and hers. And this was hopefully going to be one of the batch of the new stocks that come on to be the 5-baggers and 10-baggers in the portfolio, you know, the new blood, as I call it, into the portfolio. Now, ultimately, you know, a lot of these 5-baggers and 10-baggers, you know, how are these created? Well, if you look at most of them, they're all kind of created in fear. You know, when you look at HIMS and her stock, you were able to get a 5-bagger, 10-bagger opportunity because we were in the 2022 stock market crash. That fear created that, you know, that 5-bagger opportunity when it went down all the way down to $3. You know, when you look at a lot of the previous returns that have done very well for me, it is buying in the fear. You know, you look at the Square situation, there was a drop-off after the IPO. If you look at the Ferrari situation, it was a drop-off after the IPO and kind of fear around the valuation, or if it's going to live up to the numbers that's expected. Apple, there was concerns around the China trade war. Microsoft, China trade war 2018. Pinterest, the CV crash. InMode, the CV crash. JD, the China trade war. Tesla, it was going to go bankrupt. So ultimately, guys, if you are going to get a 5-bagger and 10-bagger, unfortunately, a lot of them are created during times of fear, which is the hard thing, because everyone's kind of saying, don't buy it, and realistically, those are actually the times where you can more than likely get those 5-bagger and 10-bagger opportunities, which is also the time frame as well where it's hard to find out if this is a stock that deserves to be down or if this is an actual opportunity. And that's where, once again, it comes back to the beginning of the video where I said, you know, this is why it's key that you do deliver on a 5-bagger and 10-bagger, because when you do these sort of stocks, there is that element that something can go wrong. So you do need to have the success to deliver to really get those returns in. And HIMS and hers had the fear. You know, HIMS and hers had the fear. You know, during 2022, it was hard to find anyone bullish on HIMS and hers. I think I was the only person making videos on YouTube about HIMS and hers. Nowadays, everyone's making videos about HIMS and hers. But going back to 2022, I couldn't really find anyone else that was really positive on it. And you go on the Seeking Alpha, a lot of the Seeking Alpha articles were negative on it. I was posting about videos about HIMS and HIRS, and I guess this is where the legendary comment comes from, is I was posting videos in 2022 saying that, this company's absolutely crushing financials, and yet the stock is going all the way down to $3, and that's where the infamous quote came from Andy Pickering, is that HIMS and HIRS is uninvestable at $3. I had comment sections when I was doing videos on HIMS and HIRS, toxic as anything, being so negative on it. But yet that was the greatest opportunity to buy. And that's the really tricky thing as an investor, is that the greatest opportunities are created in the greatest times of fear. And that's the really tricky thing, is that your best times to buy are during those time frames. And that's where you've got, as an investor, you've really got to dig in, is like, look at the financials and the company and going, actually, this could actually be a golden opportunity. So there's the first two parts, well, first three parts is that, first of all, you've got to sit on your hands quite a bit. The second part is that you are going to get things wrong, but if you can get them right, the returns are absolutely amazing. And the third point is that a lot of these 5-baggers and 10-baggers opportunities are always created where the valuation is depressed. HIMS and HIRS was, I think, around about 2x sales at the time. The valuation was so depressed. The negativity was all there. And I wanted to show some of you guys, actually, some of the comments on HIMS and HIRS from that time frame. And actually, a lot of people have deleted their comments since that time frame, funny enough. But that's kind of where it's at. And then, you really kind of studying the profitability during this time frame. You've already got, to get that valuation, you've got to get, depressed sentiment around the stock. But then you're looking at the financials going, hold on, is the market missing an opportunity here? And if you were to look at HIMS and HIRS, you would have seen that the opportunity was there, because you were looking at the business. And inside the business, you would have seen all the metrics kind of moving in the right direction. They were growing. They were moving towards profitability, and also free cash flow was ramping up. So all the key signs were there. Balance sheet wise, if there was to hit a sticky patch, the balance sheet was there, that they would do absolutely amazing. And I go back to one of the first ever investor presentations that I ever looked at with HIMS and HIRS, which is this one from around about 2020. And when you start looking inside the business, revenue, all moving up in the right direction, as you can see here. The gross margin moving up in the right direction. It was one of those where you look at the gross margins, and the gross margin was going up to 70+%, 80+%, and you're like, well, the chances of them making profitability off these gross margins are absolutely, incredible. There's a good chance that if they have them sort of gross margins, they're going to be able to deliver profitability. And even though I didn't own this stock in 2020, I wanted to use this as a slide because I bought the stock during 2022. And you can see here, this was the long-term guidance in 2020, and you can see the revenue growth moving up in the right direction. And that it was exceeding. The revenue growth was exceeding the expectations, which was even better. You're looking at the gross profit. The gross profit was moving up all in the right direction. You're looking at adjusted EBITDA. Adjusted EBITDA was moving all in the right direction, and they even exceeded it. So when you looked at all the internal metrics from a revenue and profit point of view, they were doing what they said they were going to do, and they're all moving in the right direction, and they're all exceeding it. And judging by the improvement cycles that were going on, you were able to kind of work out, okay, they were giving long-term guidance. You were able to see how they were moving more and more into the right direction on revenue growth and profit growth. And then that ultimately comes down to you as an investor. You're looking at this stock at $3 and going, you know what? Back in 2022, there was still a chance HIMS and HIRS might not have, at $3, might not have turned into the $16, $17 stock it is today. It could have still gone relatively wrong. But that's where your margin of safety kind of came in. And you're like, well, look at the track record. This is probably, if they keep doing what they're doing, if you look at long-term guidance, this is probably the valuation that they're going to get to. And then you look at the numbers and go, you know what? It's probably worth doing, because all the numbers were executing during that time frame. And then you look at the business as a whole, and you're looking at what is the HIMS and HIRS game plan for the future? What is the business model that they're going to have here? And when you actually start looking at the business model and you looked at, okay, this is what they have, this is what they're moving into, these are big TAMs, these are easy TAMs for them to go into, and you looked at the future game plan and the markets they were going into, basically the business just has to copy and paste what they've done previously and open up into more categories. So when you do look at HIMS and HIRS now, it does look obvious that HIMS and HIRS was a buy at $3, but trust me, during the time frame, there's still that 5% you have in the back of your mind that could this potentially go wrong, you still do have that. And even though that everything was lining up going, the financials are improving, they're even better than what's expected, it's clear where the TAM's going and the opportunity here, you do have to trust yourself a bit during that time of fear when everybody's saying it's a bad stock, it's going bankrupt, it's uninvestable, and no one's positive on it. There's that element of that you have to trust yourself a little bit and go, you know what, I think that the market's wrong here. And that's where you do start getting those good returns. At the same time, you're going to have those elements where there is going to be them stocks that sometimes do go wrong during that time frame. But if you can get it right, I mean, HIMS and HIRS is just a prime example of that. You are opening yourselves up to really, really impressive returns, and that's what HIMS and HIRS did. So ultimately, yeah, that was just a bit of a review on what's kind of happened in the last kind of 2 years and how that HIMS and HIRS came a 5-bag of stock from $3. And even if you didn't catch it at $3, if you catched it at $4, $5, $6, $7, $8, you know, you're still doing pretty well on this one. And I think, like I said, I think that this is still a really early investment. I think, you know, you're only really in 2 years of holding this investment, and you start thinking about where the stock could be in 2027, 2028, 2029, and it's exciting. And it just comes back down to one of those where I look at HIMS and HIRS now and I go, it's key for me probably not to do one of my early mistakes, is that when you start doing get these winners that you go, oh, you know, I made good money, I'm going to move away. Because if you do have a strong business, you know, it could be with one of the ones that's only just starting. You know, you think about where the stock price could be in 2027, 2028, 2029 if they keep doing these financials. And you know, we're talking about that it's you know, if you have a $3 average, you know, you're up a 5-bagger now, but this could be one of those that even comes a 10-bagger and 20-bagger. And, you know, talk about your returns that you could potentially have on that one in the longer term. That's the investment that can set you up for life if you do start doing them sort of opportunities there. So yeah, anyway, I hope you enjoyed it anyway. I hope it wasn't too much me rambling on, and I wanted to talk about the big returns and a bit of a celebration, but also what it takes to get those big returns, what you have to go through, and the time frame that you have to go through, and also like what you have to go, the negativity that sometimes is around that you have to go through to get those big returns, and also the mistakes that you sometimes have to go through to learn and to get these returns as well. Anyway, hope you enjoyed it, guys. Have a good weekend. See you in a bit.